Hello, everyone, and thank you for joining us at this Your Overseas Home webinar. My name is Chris. I'm the editor at Your Overseas Home, and today I'm chatting with John Diking from, I never know if it's Diking or Dicking.
Diking.
Diking, sorry. We're all on first name terms here, so I never. From Chase Buchanan, Wealth Management, about your financial considerations that you should be thinking about when moving to Spain. It's great to have so many of you with us today. We've had a huge turnout today, so we're so thrilled to see that so many of you, are going ahead with your plans in Spain. Before you start your presentation, John, how about you just introduce yourself and tell us what Chase Buchanan does?
Yeah, thanks, Chris. So I work as a private wealth manager for Chase Buchanan. So I'm based in the Marbella office, but I also regularly travel to our other offices to see clients. We have offices in Alicante and Tenerife. So we are a company that's an international wealth management company. We have offices across Europe and North America. So our focus mainly on clients who live in Spain or are moving down to Spain. And I've lived in Spain for 21 years. I'm Swedish, by the way. And I've helped expats, with the transition from moving abroad, especially from the UK to Spain, because there are quite a few things you need to look into from a financial planning point of view, because tax and legal systems are completely different in Spain when compared to the UK. So that's what I help my clients with the financial planning.
Excellent. Okay, so we're going to go through the financial and tax essentials and moving to Spain. But do throw in your questions onto the tab, which should be on the right-hand side of your screen. We'll cover as many queries as we can, but if we don't get around to them all, please don't worry. Any questions that we don't answer will be sent forward to John and the team at Chase Buchanan. So also, obviously, we'll be giving you John and Chase Buchanan's contact details at the end, and you will also be getting a recording of this presentation to keep for yourself or to send on to any family, friends, or spouses you're still trying to convince to move to Spain with you. So, John, over to you.
Yeah, thanks. So I just want to talk you through sorry, I forgot the slide earlier. Sorry, the basics about Spanish taxation. So the tax year in Spain goes from the 1st of January to the 31st of December. So that's quite an important thing to bear in mind, because people coming from the UK, they're used to tax year going from the 6th of April to the 5th of April. And also, Spain is obviously a very large country, and it's divided up in 17 autonomous tax regions. So tax can be different whether you move to, for example, Alicante, if you compare it to Costa del Sol. And I'll talk you through that later as well. And I think the basic thing to know is, like, when you become a tax resident in Spain, and the general rule is that if you spend at least 183 days in Spain in a calendar year, then you would normally be deemed a tax resident in Spain for that year. However, the other items that can determine your tax residency apart from the general rule. So, for example, if your center of economic interest is in Spain, then you can be deemed a tax resident anyway. Or if you have a spouse or dependent child that are resident in Spain, then you could still be deemed a tax resident here.
Okay. And I guess so if you're planning your retirement to Spain, obviously that's gonna have implications when you decide to go.
Yeah, it does have implications. It's really important to seek financial advice before you make a move, because unfortunately, sometimes I speak to people, they bought a house in Spain, they settle down here, they just want to get the move sorted. Then they come to someone like myself and say, right, John, help us with the planning now. And that's like, oh my God, it's a bit late, should have come earlier. We can still help you out. But there are things you could have done whilst you still were a UK tax resident to be more efficient. For example, you got to be careful when you sell your UK property to not be taxed on capital gains when you come to Spain. So you got to look at timing of events. It's become a bit more complex now with after Brexit. People normally need a visa if they're especially the UK nationals unless they have an ancestor in Ireland they can use. But otherwise, it's a bit more difficult when you need a visa. So you got to look at the timing of the visa. That needs to be coordinated with the tax residency planning as well. You need to look at things like pensions. If you take a lump sum, how is that taxed in Spain? If you don't take it out in the UK, ISAs, etc. So lots of things to consider. Ideally, you would speak to an advisor like myself a few months before you actually move to Spain.
Okay, very sensible. Now, tell us about the kind of taxes I'll be paying in Spain.
Yeah, so we're going to talk about this in detail today. So the things we're going to go through is income tax, which is you're liable for income tax on your worldwide earnings when you become a Spanish tax resident. We're going to look at capital gains tax, which in Spain is called savings tax. In Spain, in certain regions, you have to pay wealth tax or solidarity tax. There's also a reporting of assets abroad you need to do, which is called Modelo 720. And then we're going to look at inheritance tax as well.
Excellent. So on to the first, income tax.
Yeah. So income tax, as I mentioned earlier, payable on your worldwide income from all your sources. So it doesn't matter whether you get an income from the UK or any other country. If you live in Spain and you're a tax resident in Spain, when you receive the income, that income will be liable for tax in Spain. Now, the general income tax, it's split up between general income and savings income. So savings income is that capital gains. So the general income is when you get work income, pension income, or rental income. And savings income or capital gains is, for example, interest on bank account. It can be dividends from shares. Or it can be, for example, selling a buy-to-let property or selling an investment. That will normally be taxed on the savings rates or capital gains tax rates. Then you got to bear in mind that the tax, the general income tax is split up between state and regional levels. So there's a state level which normally tends to be half the tax, and then there's a regional level. And because there are 17 different regions, each region has made some slight variations to the tax rate. So the income tax rates tend to be the same pretty much the same in most regions. There can be a slight difference, especially at higher tax rates, but not that much. And the savings tax or capital gains tax is exactly the same across all the tax regions. And the income tax return, so you do an income tax return for both the capital gains, obviously, and the general income. You need to do it by the 30th of June in the following year. So if you have an income and you're resident in Spain in 2023, I have until the 30th of June 2024 to complete my tax return for this year.
Okay, and so I suppose what kind of rates are we going to be paying on that income tax?
Yeah, so the income tax rates, well, let's start with savings tax. Let's start with the general tax, which you see here. Sorry. So, as I said earlier, it's for employment, pensions, rental property, and the tax rates. This is an example for Andalusia here in South, which is the largest region in Spain. You start at 19%, and then it goes up. It's like a sliding scale, and the top rates are 47% for people earning more than 300,000. And that only applies to the element that exceeds 300,000, for example, in this case. So everyone gets personal allowance of 5,550, and then you can have some extra allowances if you're working, or if you're over 75, you get a bit extra as well. So generally, and also if you do a joint tax return, you can get an extra allowance. So that gets knocked off, but then you pay, the rates we see here after allowances. So these rates are quite high. I mean, it's important to seek advice as well if you want to structure your income. There are ways to plan ahead a bit and hopefully not be liable to the high rates on income tax if you have flexibility when you draw your pension income, etc.
Yeah, so I'm not seeing a tax-free band there like we have in the UK.
So you got a personal allowance of
Okay,
5,550.
right.
So if someone's got earnings below 5,550, they wouldn't pay any tax at all.
Okay,
And then you can have some extra allowances in certain regions. So normally, if someone's got very low income, they pay very little or no tax. But someone that's got around 67,000 euro in income after allowances, they pay about 45% on the excess. So the high rates here, they can start at relatively low levels if you compare to some other countries. So that's why it's important that if you do have flexibility, if you have private pensions, you may not want to draw a large amount in 1 year. You normally want to drip feed it over many years so that you pay lower rates over many years rather than taking lump sums in one given year. And that's one of the reasons why if you have a pension commencement lump sum available that you can draw down, from your private pension before you come to Spain, then normally that's a really good idea to draw it tax-free because there's no such thing as a tax-free element here in Spain
right.
when you draw down a pension.
Okay. We've had a question from Lisa. I'll just sort of throw these in if they seem relevant at the time. If
Yeah,
you get paid from the UK and are taxed in the UK, do you still pay tax in Spain on top?
yeah, it's a good question. So I've had this a lot. So there is a double taxation agreement between Spain and the UK. And this agreement is designed to make sure that you don't pay tax on the same item twice. So if you have, for example, a pension that is taxed at source in the UK, then when you complete your Spanish tax return, you have to declare this pension income as well in Spain. But your tax accountant would then make sure that um, they put down the tax at source in the UK, which you get credit for. And if the Spanish tax is higher, you would only pay a bit of tax, which is just the excess, just the difference between what you paid at source in the UK and what you should pay in Spain. So you don't pay the same tax twice.
Okay. And just because we have quite a few American viewers as well, Kate has asked if there's a double taxation agreement between Spain and the USA as well.
I'm pretty sure there is,
Okay.
almost 100%. Yeah.
Uh, and Chase are allowed to advise Americans as well, I understand.
Yeah,
So,
we are, and we have American nationals who work for us as well, and they have the right licenses and qualifications to advise US clients, which is quite unique. There are very few firms here in Europe who can actually compliantly, in the right way, give advice to Americans who live in Europe. So if you are an American and you want to move to Spain or living in Spain or other countries here in Europe, feel free to get in touch, and I would get one of my colleagues involved to advise you because there's complexities linked to the US, like you got some reporting requirements linked to IRS, you got 401k pensions, etc. Some things that are very linked to US nationals, which we need to make sure that when we give you advice, we got all the angles covered. So we'll look at the US bit of things, Spanish side of things, and there may be other international items we need to look into. So when we give advice, we do it in a holistic way that we cover all the things that are relevant. Because as an American in Europe, you're normally liable for American tax, even if you left the US. So that's something very specific to the US that we need to take into account as well. So you can't just look at the Spanish taxes. You have to look at the US system as well when you're an American. That's something we would do for you. We can offer you that service. Please get in touch if you want to have a chat.
great. Okay. So let's get back to tax and capital gains tax and savings. I think we're going to talk about next.
Yeah, yeah. So what you see here is that these are the tax rates for capital gains or savings. So this is for interest on bank accounts, dividends from shares, or capital gains on sales of investments or buy-to-let properties, for example. So these rates are much more attractive than the general income rates. So they start at 19% and they go up to 28%. But you have to have investment income of at least 300,000 to pay 28% on that excess. So if you have, for example, investment income up to 6,000 per person, it can be taxed at just 19%. So I think these are really attractive rates. And there are tax efficient vehicles in Spain that can be set up so that you defer the majority of the tax on investments, and you can just draw the income you need when you retire here, for example, and you would normally be taxed at very low rates on the scale. So this is something that we can discuss if someone is interested in looking at those type of options.
Okay. Now, the tax that we all aspire to pay, but I'm sure don't really want to pay when we get it, the wealth tax. Tell us about that.
Yeah, so wealth tax is something that used to apply across Spain in most of the regions. And over the last few years, there's been some regions that have decided that they want to effectively eliminate wealth tax. So wealth tax is basically a tax on your assets, on your net assets after loans and mortgages. And previously, most regions, if you had at least 700,000, then you would be liable for wealth tax. So that's if you have like cash and investments, for example, worth 700,000 or more, then you will normally have to pay some wealth tax. And there was a property allowance of 300,000 per person against your main residence in Spain. So, for example, a couple could have a property worth 600,000, and if that assets of 1.4 million, they would normally be exempt from wealth tax. Now, there's been some changes recently, as I said. So, Andalusia, Extremadura, Murcia, and Madrid currently have effectively eliminated this tax. So what happened last year is that when the region started to getting rid of this to attract foreigners coming down with assets, then the right-wing central government, the left-wing, central government decided to actually try to stop this. So they introduced a new tax on wealth, which is called the solidarity tax, which effectively kicks in after allowances at 3.7 million euros. So it's a much higher level. And this tax does apply across all regions. So in the places that eliminated the old wealth tax, you still have to look at the solidarity tax. So currently, if you live in Andalusia, where I live, which is like the Marbella region, then you're only liable for taxing your wealth at 3.7 million. But there are still some main expat regions, like, for example, Valencia region, which includes Alicante, where you pay wealth tax at 500,000. So it's important to look at these things, and there are ways to, if you do have wealth that is around these thresholds, then there are ways to reduce your wealth tax liability by financial planning. So there are like vehicles you can use to use certain rules in the wealth tax laws to reduce your income, and that can reduce your wealth tax. It also tax reducers that can be discussed with your financial planner that can help you reduce your wealth tax bill. And you can plan ahead. You can, for example, make sure that you use your property allowance. Like if you use, if you buy property of 600,000, then normally for a joint couple, then normally you would use the whole allowance. So there are ways to try to use up allowance as much as possible and reduce your bill.
Okay, I think you got a slide on the national solidarity tax.
Yeah. So solidarity tax, we just discussed. As I said earlier, you need to have 3 million plus an allowance of 700,000, so 3.7 million effectively. So this tax is very similar to wealth tax, it's just like at high levels. And for people that are liable to both wealth tax and solidarity tax, you get credit for your wealth tax when you submit your solidarity tax return. So you're not paying the same tax twice.
Okay, and if you leave your wealth in the UK, you can't. I believe there's something called the Modelo, which kicks in, and you have to pay tax on that anyway. Is that correct?
Yeah. So this is what we can see in this slide here. So when you are a Spanish tax resident, Spanish authorities want to know if you have assets abroad worth at least 50,000 euros. So you would have to report that you own these assets. And this report is called Modelo 720. It's just an information requirement, so it's not an extra tax. But obviously, Spanish authorities can use this information in the future if you pass away, etc., to look at inheritance tax, so they can look at what assets you declared you have. So basically, the way this tax works is that if you have 50,000 in cash, or 50,000 in investments, or 50,000 in property, as soon as any of these asset classes exceeds 50,000, then you're liable to do this report. And it doesn't matter if you divide it up. Like if you got like 10 accounts with 5,000 euros each outside Spain, and as long as the total is 50, you still need to report all these accounts. So it's the total value that determines the liability to report it. This tax it's been like really debated over the last years, because previously there were really high penalties payable if you forgot to report, or if you reported incorrectly or did mistakes. So you could be liable for thousands and thousands of euros in fines and interest rates and penalties, and it was really severe, and people were scared of doing this and get it wrong. But the European Court of Justice in January 2022, they issued a ruling saying that this was unfair. Like, Spain was effectively penalizing people for having assets in other European countries, which was against the EU rules of free movement of capital and people and services. So they told authorities that, look, you can't issue these outrageous fines for this Modelo 720. So if you do something wrong, the fines are now being reduced to very small fines, which are pretty much in line with other tax offences, which are minor. So it can be hundreds of euros instead of many thousands. So people generally are less worried about this now, but it's still got to be done. You still have to report the assets, but there is less of a worry in case something goes wrong.
Okay. Well, I mean, in general terms, are British and I guess American people taxed in a worse tax position than if we were still in the EU, or does it make no difference?
Well, if you live in Spain and you come from the UK, then you're still gonna pay the same tax as a Spaniard. If you have capital gains in Spain, and you're not gonna pay more tax than a Spaniard on the same capital gains. So there's no negative impact if you're a resident in Spain when it comes to taxes. There are some taxes that you pay as a non-resident, which could be slightly higher for non-residents than residents. But that's not the topic of this webinar today. So we're going to look at what people pay when they are living in Spain.
Sure.
Um,
Okay.
yeah.
So inheritance.
Yeah.
That's another one, a tax that we all aspire to pay.
Yeah. Yeah. We all try to reduce this if we can, and there are ways to reduce it. What you got to look into when you look at Spanish estate planning and inheritance tax is that the rules in Spain here are totally different from the rules in the UK. So people coming from the UK, they're used to the term estate. So if you die in the UK, then normally you look at the estate, which is like all your assets, and any estate valued at £325,000 or more will be taxed in the UK at 40%. But in Spain, you look at the tax liability per person that receives the inheritance. And in some regions, there are allowances of up to 1 million, for example. So if you have let's say you have a spouse and 3 children, then everyone can get like 4 million potentially in Andalusia, tax-free. So everyone can get 1 million each. So this can be much more beneficial than the UK rules if it applies to you. But generally there is inheritance tax in most regions, and some regions they tax close family quite severely. So you can pay tax between spouses, which you normally don't do in the UK, but you would in some regions of Spain. And the tax rates depend on the relationship. So normally you have exemptions and allowances for spouses and down the bloodline to children and grandchildren, but for example, stepchildren normally don't get any beneficial tax treatment or treated as almost as strangers. So that tax can be quite high if you pass Spanish assets to stepchildren, or if you pass it to friends or distant family. Um, so the regions that have effectively eliminated inheritance tax between close family members are Andalusia, Murcia, Valencia have said they're going to do it, then it need to just write it into the law, which I think is going to be done soon. The Balearic Islands have already written it into the law, but it's been a bit of a debate because they're currently not treating non-residents who receive a Spanish inheritance in the same way as residents. I think this is probably going to be aligned with the Spanish national rules eventually.
Okay, and what kind of rates will we be talking about?
Yeah, so I'm going to give an example of Murcia. So in Murcia, you can look at the top box to the left. So it says spouse, civil partner, child, or grandchild. So if you are any of those three, then you will get a 16,000 euro allowance and a 99% tax relief on the excess. And you would also get a 95% tax relief on the main home up to 122,606 if you retain it 10 years after death. So basically, it's been effectively eliminated for children, spouses, and grandchildren. If there is any tax liability paid, it will be peanuts. You just pay 1% of the normal tax rate. However, as I mentioned earlier, if you don't fall into this category, if you're a stepchild, niece, a nephew, sibling, or unrelated, a friend, then you will get no allowance at all in Murcia. So anything above 8,000 euros will be taxed. Tax rates are a sliding scale depending on amount. So they go from 8 to 89%. So for example, if someone gets a very large amount, I think it's something like around 10 million or so when they're just a friend, they can go up to those kind of rates. So it's really important to plan ahead. Like if you know that if you don't have any natural children, you want your assets to be passed to stepchildren, which is more and more common nowadays. People marry sometimes twice or 3 times, and you have children from previous relationships. You need to look into your estate planning in Spain. There are ways to structure your assets and structure your wishes in a way that you try to reduce this liability. It's something that we can discuss as well.
So if you bought with a sibling, say, or
Yeah.
with a partner, with your girlfriend, you would and one of you dies, then you really are. Then you could lose the rest of the property because you'd have to pay tax
You
on
gotta be
that.
careful. Yeah, I mean, I've come across people that they've just lived together for a long time, but they haven't formalized it. They're not married. They're not civil partners or pareja de hecho, as you say in Spanish. So they could be treated as total strangers in case one of them dies. So I do encourage people that, for protection in case of death, if they live together, they are effectively, almost like spouses. They should consider getting married or registering a civil partnership in Spain to get that protection.
Okay, which takes us on to Spanish wills.
Yeah. So when you buy a property in Spain or have significant assets in Spain, it normally makes sense to have a Spanish will covering those assets because if something happens to you, it's a quicker process if your wishes are laid out in a will. But what a lot of people don't know is that Spain operates a forced heirship system, which means that if you have children, then about 2/3 of your assets would have to go to your natural children on death. And I've come across people that they've fallen out with the children not looking after them, they don't speak to the children, they don't want this. So and also a lot of people, especially from the UK, they want assets to the spouse on first death, and they want everything to go down through children only on second death. So if that's your case, what you can do is you can tell the notary when you set up your Spanish will that you want the country of your nationality to apply for distribution of assets. So, which means that, for example, for UK nationals, and this is something that is still respected in spite of Brexit, then they can respect it in the UK. There's no forced heirship. You got total freedom of choice who you want to leave assets to when you die, and that will be respected in Spain as well. But you got to make sure you mention that in your will, so there's no doubt that this is what he wanted. And this is according to an EU directive that still applies after Brexit. And when you set up your Spanish will, you also got to be careful so that it doesn't clash with your other wills. Like, you don't want to inadvertently eliminate or invalidate your other wills in other countries. So it's important to coordinate this. And for example, if you and you can invalidate a Spanish will as well, because normally a UK will start with a wording saying this will supersedes all my previous wills, and then you can actually invalidate your Spanish will. So when you have wills in different countries, you got to be careful so you don't make a mistake.
Okay. We are over time, but we're going to continue because it's a vital topic, and it's interesting. So we'll keep going. Okay. So what could we do wrong?
Yeah. So sorry to be slightly over time. I'm going to try to be a bit more brief now. I don't want to keep people too long. I think it's late in the day, and probably people getting bored. So there are lots of things you got to be careful with when you move to Spain from a different country, because the tax and legal system being different here. When you come from the UK, be mindful that UK tax-free savings products like ISAs, national savings, etc., they are taxable in Spain. There's no such thing as tax-free ISAs here. If you have certain types of offshore bonds, they could be treated in a really unfavorable way. They can be heavily penalized if you have them as a Spanish tax resident. If you sell your main home, you got to be careful with timing of events. So you can come down at the wrong time of the year if you just sold your house, and you could potentially attract Spanish capital gains tax on house sales. So it's important to look into it. The tax-free lump sum. So if you have a private pension in the UK, then if you are over 55, then most pension schemes would allow you to take a 25% tax-free lump sum. And that's normally a good idea of doing. Like, even if you got no plans for the funds, just take them out, because if you need them later when you are in Spain, you'll be taxed on that lump sum. There's no such thing as a tax-free lump sum in your pension. And we can advise, if you don't need the funds, you can just reinvest them in something else that's tax efficiently grows your 25% lump sum or gives an income. So we'd kind of like rebase the tax bill on those funds and do something different if you don't need the funds. And bear in mind also that this is more for UK nationals as well, that because of Brexit, if you have, I come across people that they have a family advisor, someone's advised them for years and years, and they'll like to maintain a relationship with this trusted advisor. But when they move to Spain, the advisor tells them, oh, sorry, you moved to Spain. Oh, I'm so sorry, I can't help you anymore. I can't service you. I can't give advice. So UK IFAs are normally not allowed to advise into the European Union, because here in the European Union, you need to have something called MiFID passporting rights, which we do have at Chase Buchanan. So we can compliantly give advice to people across the European Union. And even if someone moves to Spain and becomes a client and then moves to another European country, we can continue that relationship. That's not a problem. But you can unfortunately not keep your UK advisor. That would be very difficult, and it would fall foul with EU rules if they continue advising you, which they would not be happy to do, because they don't want to fall foul of those regulations.
Okay, so actions, and what's the next thing that we have to be doing?
Yeah, so I think a lot of people I speak to, when I sometimes speak to people that they're very early stages of planning a move to Spain, and it may be that they're coming down like in 2 years' time, but they just want to start planning. And people get overwhelmed now after Brexit. There's just so many things to think about, visas, etc. Like, they say, well, where do I start, John? And I can be the first person they speak with. And you need to coordinate these things, like what's urgent, what do you need to prioritize right now, what can be done later. So what we've done to help people with the planning is that we created and recently launched a Spain residency guide for expats, which can be downloaded on our website. And if someone approaches me, I'm happy to send them a copy by email as well. And it's a really good guide, and that says in a very simple and summarized way all the things you got to consider when you move down to Spain from the UK. and the order of things you need to do these things. And also we created a moving abroad checklist where you can just look at checklist and tick off items as you go along, make sure you don't miss anything that's important. So this is something that I could send out as well upon request. Happy to do so, and we've had really good feedback because I think it's these tools are really helpful. And of course, I'm available as well to give you support on the way. So when people move down, we tend to have a chat maybe twice at least before they move down. And just before people come down, we kind of like check all your ducks in one row before you actually make a move and become a Spanish tax resident. And then once people move down, then we then effectively set up new arrangements and advise them on investments and pensions, which are fully compliant with Spanish and EU regulations, and make sure that we are tax efficient here in Spain.
Okay, and how do people get that guide from you?
Right. So, sorry, just gonna, So the guide, if you want to, by the end of this call, you're gonna see my contact details. So you can just send me an email, or you can actually book a free consultation, and then I would have a chat with yourself and send you these guides. So that's not a problem. So I'm happy to do.
Okay.
So I just want to summarize, there's so many things to consider about how can we help you at Chase Buchanan when you want to make a move to Spain. So we can offer investment and pensions advice. So we make sure that your assets, your investments and pensions grow tax efficiently and give an income in retirement, and they are invested in line with your risk profile. We make sure that everything that is set up for you is compliant with Spanish and EU regulations and continues to be so as laws change over time. And we also look at Spanish wealth and solidarity taxes and try to minimize them for you using different tools that can be used to minimize them. There are tax reducers available. Then we look at estate planning as well. So we want to mitigate Spanish and UK inheritance taxes. We take a global, holistic view, and we understand that both Spanish and EU and UK regulations. We'll look at things like UK domicile rules and Spanish domicile of choice and things like that, and explain this to you so you know your options and you can plan ahead. And we can tell you what the consequences will be if you pass certain assets to stepchildren, for example, and what options you have to reduce tax for people that don't benefit from allowances when they inherit here in Spain. We also offer client support. So we regularly review any financial arrangements that we set up, make sure that they continue meeting your objectives, that as things change in your life, or as things change in environment like regulations or markets, we want to make sure everything continues to be right for you. I act as a one point of contact for my clients. So people approach me by WhatsApp, email, call me up, and I always like to be available. If I'm in a meeting, I try to call back as soon as I finish. So I'm very approachable. There's no need to speak to any receptionist or admin person. Normally, I deal with all queries, and if I need support internally, I would just go to the right person in my team to help us out and respond to query. A lot of people coming down that just want to relax and enjoy retirement, spend time on the beach and play golf, and they say, John, I'd rather that you speak to my accountant or lawyer if you don't mind, and that's something I'm happy to liaise with them as well and explain things to them on your behalf, and and send with your permission your tax reporting to them, etc. And then in case you die in Spain, then I would assist your family in terms of giving them support and guidance, and if they benefit from any investments or pensions, I would help them to get their benefits.
Okay, and just put your contact details up.
Yeah, so on this slide here, you can see my email and mobile phone number. And if you happen to have your mobile phone at hand right now, if you click on the QR scanner or the camera, you can actually if you look at the QR code, which you see there, it will take you to a booking page, which will allow you to book a video call with myself. So I do offer a free initial consultation by video or face-to-face if you're coming down to Spain. And this is a really good opportunity with no obligation to proceed for us to just tell you what we can do for you, what your options are. So you got nothing to lose by having a chat with myself, and I'm sure that we can help you one way or another. And I'm happy to help people at early stage after planning. So if you feel like you're overwhelmed with all this information, don't know where to start, I'll send you the checklist, I'll send you the guide, and I'll have a chat with you to see what you need to do specifically linked to your situation. And we stay in touch with you, make sure that you get this support in the whole transition period when you're moving down. And also for
Excellent.
people that are already in Spain, so I'm not just looking at people moving down. If you're already in Spain, I can help you as well. We can review your existing arrangements, make sure that it continues to be compliant and tax efficient. And we can also look at how we can reduce fees on your existing investments and pensions. So sometimes it's worth reviewing things you've set up elsewhere to see if we can help you to reduce the cost that you're currently paying.
Excellent. And that QR code works. I just made it work. We're gonna have to use
Of
that
course it
use that
works.
more often now. Excellent, much, John. Okay, well, we really have run out of time now. So if you have any questions, do please either do the QR code thing or take down John's details, and we really would urge you to get in touch with Chase Buchanan and John Diking in particular, because we've heard such great reports from clients who he and Chase Buchanan have helped. Before we finish, I just for our benefit, I would like to invite you to, if you found this useful, to put a review on Trustpilot, which you'll find there's a link there, or you'll also find just by going to Trustpilot and putting in your overseas home. That would be really helpful too. So good luck in your. I'll just move that out of the way. Good luck in your move to Spain. Thank you very much again to you for coming, and thank you very much to you, John, for an excellent presentation. Thanks,
Thank you,
and
Chris.
bye-bye.
It's been a pleasure. Cheers.
Cheers. Bye.